Only a half hour prior to the close of the stock market today, President Trump came out and confirmed what we've been largely anticipating here for the last week or so. Indeed, we are going to have 25% steel import tariffs and 10% on aluminum. And so we're going to take a look at how the market responded to that news here today. There was some reverberations across some impacted groups and currencies. And then I'm going to take a look at one of the sectors that's holding up better than the rest and focus our trade application example on a divergence I'm spotting using that market forecast indicator. So with that, let's go ahead and get started. Welcome to the Market Outlook video. It's March 8th, 2018, and I'm your host, Brandon Van Zee. Great to be on board with you here this evening. Hope that you guys have been enjoying the last couple of days. I know David and I have, as we've kind of gotten back into the swing of doing a little bit more analysis on the market. So remember, if you're somewhat new to David and I's teaching, we would encourage you, first of all, just to get signed up by subscribing to our YouTube channel. That's going to be the easiest way for you to keep tabs on us. Click that red button there. While you're there, click the thumbs up if you appreciate these videos and if you get some education out of these videos on a regular basis. It also allows us to recognize whether you guys want us to continue to do these videos for free on YouTube going forward as well. Now, in addition to that, there's a place where you can leave comments for us if you scroll down below on YouTube. And then lastly, in the description area, you're going to see some handy links, including one link that'll allow you to sign up for our email distribution list, which gives you a little bit of a reminder on the video itself on a daily basis, and also entitles you to see the daily stocks that are on overbought or oversold cluster signals within the S&P 500. We're also heavy users of Twitter, so we would encourage you to follow us there. My handle is @BrandonVanZee, all one word. The Market Scholars handle is @market_scholars, and David Settles is @DavidSettle42. While you're there, we would encourage you to click like and retweet on tonight's Market Outlook video. Again, it helps us kind of get the word out about some of the education that we provide here at Market Scholars. After Twitter, we're also on Facebook, and we would encourage you to sign up for our Facebook group if you haven't done so already. Great to have already 900 of you joining forces on there. So with that, let's go ahead and get into some analysis of the markets. And you can see here that I do have the S&P 500 pulled up in front of us. The S&P 500 was up 12 points today. That was good for a 0.45% increase, which is a decent sized day. You can see it was a fairly bullish candle in the end. We closed near the highs of the session. So as some of this news was coming out that this announcement was going to be made about the tariffs, stocks started to react positively to that news. Potentially, it could be because the news wasn't as hard-hitting as it could have been. For instance, Canada and Mexico are going to be exempt from those tariffs, so it's not going to be an all-out trade war. At least that's not the thinking right now. And so the markets did respond reasonably favorably to that. Now you'll notice that the background color of this chart is green. That is a change of pace from a couple of days ago when I did the video, and it was red, and that tells us that we now have a bullish posture using that market forecast green line, that intermediate term line down below right here. In addition to having the posture change, it's also good to see that price action is behaving a little bit better. We're now above that moving average. Now notice on my chart setup that moving average color itself, and this is a 30-day moving average for those of you that are somewhat new to these videos, it's yellow right now. The reason for that is yellow is kind of a cautionary mixed signal sign. If you think about a stop light, you either have green, red, or yellow. So think of yellow as yield, cautionary. What it's saying is that the moving average itself, which is a lagging indicator, is traveling down in this particular case. But price is above that falling moving average. So you have two different opposing sides, so to speak. You have some bullishness, some bearishness, and we'll find out soon enough who's going to ultimately win that battle. But it is a good sign because prior to today, that moving average line would have been red like it's been for really the last couple of weeks here. So we're starting to find a little bit more stability there. Let's go ahead and take a look at our next chart setup, and this is going to be a 4-grid here. Again, looking at that market forecast indicator, which you can find on the Thinkorswim platform in your studies areas. And you can see down below here that we have all 4 of our charts green. That tells us that, again, we have bullish market conditions. You'll recall that 2 days ago when I did this video, it was only the NASDAQ and the Russell 2000 that had those bullish postures. So it's good to see those mega cap stocks starting to pick up the pace a little bit. One of the things that I mentioned the other day was that it was good to see the Russell 2000 stabilize, because it can oftentimes be a leader when there's a reversal in markets. And so that is playing itself out at this point. One thing that I would point out here before we get too excited about this rally, notice that the Dow Jones still is below that falling moving average. So here's an example of that moving average line being red here rather than yellow or green. And so we are still seeing the Dow Jones being a bit of a laggard there. But again, we've got that yellow tip there on the S&P 500. We've got the yellow tip there on the Russell 2000. But look at this. The NASDAQ has that green tip. So not only did it have a bullish posture before some of these other indices, but it is now leading in terms of the moving average itself is starting to curl a little bit higher. So with that, let's go ahead and take a look at our 3 green arrows setup. And so the way that you would read this particular chart setup, it's the same 4 indices. We're still looking at 3 months of length of chart here, and every one of the candles represents 1 day in action. The difference in the background colors on this particular display is that if it's green, it means it has 3 green arrows. If it's red, it means that it has 3 red arrows. And if you ever see white, like we did a couple of days ago, that means there's a mix of green and red arrows. So interestingly, the Dow Jones actually still has 3 red arrows, despite all the 3 other indices having 3 green arrows. On the whole, again, that's a positive sign, at least if you're bullish on the market. I do understand that many of you trade the markets bearishly, and so you might not appreciate bullish days like this. But for those of you that are long-only investors, which there's probably quite a few of you out there, since a lot of your 401k assets are probably designed to only benefit when markets go higher, then we should applaud this news. This is excellent firming up of the charts that we've seen here over the last few days. Let's go ahead and take a look, and I should mention, by the way, as well, if you want a primer on the 3 green arrows strategy and some of the nuances of the MACD, many of you were able to attend a session with David Settle today. He did a fantastic job kind of breaking that down. He does a wonderful job, and looking forward to seeing him work with a lot of folks going forward as well. Let's take a look at our next chart setup, which is our 1040 weekly crossover method here. And what we're looking at here is a longer term approach. Keep in mind that we don't get a lot of signals on this particular chart setup. So we don't spend a lot of time on the analysis here just because it's typically the same thing day after day. If there's anything that ever does change, we'll be sure to alert you to it. But really what we're looking for, major crossovers, one being the 10-period exponential moving average on a weekly candle chart, and that's represented by the orange lines you see on the charts. And then the black line will represent the 40-period exponential moving average. What we're looking for are crossing over of the moving averages themselves. You'll notice back here, the Russell 2000, when we had that little bit of a breakdown earlier in the year in the market, the Russell 2000 price action, the prices, the candles actually came down and touched that black line. In fact, went firmly through it. For those of you that are a little bit more familiar with daily candle charts, you can think of that black line as being very similar to a 200-day moving average. So prices came down and actually touched that, breached it. But because the moving averages lag price, the moving averages never did cross. And now we're seeing the Russell 2000 kind of establish a little bit of leadership. At least that's the way you could look at this most recent weekly candle. Of course, today's only Thursday, so we've got one more day to go. And by the way, I'll be doing the video tomorrow as well. David normally does them on Fridays, but he's got something going on tomorrow, so we're kind of swapping a couple of days. He's going to take one of my days next week. But the Russell 2000, which looked a little bit precarious there a couple weeks back, actually stabilizing very nicely. And if you look close enough, like if I come in here, right click and go to maximize this particular chart, you'll notice that that line curled up there. You can also kind of use this down below to gauge that, this purple line you can see. But you can even see it with your own 2 eyes right there with that orange 10-period moving average. It did curl higher here. That's a good sign, because this was some very destructive price action here. The path of least resistance at that point would have likely been for that particular security to go lower, but it has found a little bit of stability. So again, I'll think of that as a very bullish element of the current marketplace. All right, let's go ahead and take a look here at our Sector 12 grid. And for this, I do need to kill the camera feed so that way you guys can see all 12 of these charts. And what we're looking at here is a clean sweep, ladies and gentlemen. How wonderful is that? You'll recall it was just a couple days ago where it was a mixed bag, truly a mixed bag. So in just a couple days' time, the markets have stabilized enough to kind of flip the entire market back to a bullish posture. Okay, so as we look at this, one of the things that you might do is say, okay, well, if all sectors in the United States that make up the S&P 500 are green, or bullish, I should say, how do you distinguish between them? How do you know which ones are stronger than others? Well, there's a variety of ways that you could ultimately do that. One of the things that I don't talk a lot about when I'm doing these analysis, but that could come in handy in this particular conversation, notice off to the right-hand side of these charts, I've got these particular charts set up not with prices themselves on an absolute basis, but instead on percentages. So as just one example, look at technology. That's your chart over here on the left in the middle row. Notice that we have this kind of label off to the right-hand side of the chart that says 8.81%. So what that's telling us is that over the last 3 months, which is the length of this particular chart, XLK is up 8.81%. Now that does not include dividends, so if you include dividends, it'll be up even a little bit more than that, but all charts are kind of treated equally from that perspective. So as you look at that 8.81%, it should be no surprise then knowing that when you compare that to all of the other charts out there, really the only other one that comes close to it is its next door neighbor, which is consumer discretionary, which is up 7.58%. Well, you say, okay, well, one's up 8%, one's up 7%. Not a whole lot of difference there, is there? Well, I don't know. If you start looking at price action, I would say that there is a difference. And the difference is, look at the tools, right? The moving average on this particular chart is red with its tip right there, whereas technology over here is green. So it's not even a situation of yellow versus green. It's red versus green. So as of right now, if I had to go out there, I wouldn't say that technology versus discretionary is a coin flip. I would say that the odds are firm in that technology represents a stronger chart right now. That price action, first of all, is close to breaking out of those prior high ranges, whereas consumer discretionary, sure, it's up 7% over the last 3 months, but it's spent a good chunk of the last month and a half traveling down. And then of course, in addition to that, you have that moving average on technology curling higher, and you have the exact opposite on consumer discretionary curling lower. So that's the benefit of looking at technical analysis. It's not just how much is a stock up over a certain amount of time, it's what are the price candles and other moving averages and indicators telling you along the way. All right, and by the way, our trade application example is going to come from the technology space a little bit later. Before then, let's go ahead and take a look here at our next 12 grid, which will be the foreign markets 12 grid. Here we've got more of a mixed bag. And I think that does make some sense. Remember, some of these areas of the world are going to be grappling a little bit with, what does the announcement on steel and aluminum imports mean to any particular country? And so, as you can see, it's kind of a mixed bag here. One of the countries that has been discussed a lot has been Canada. And you'll see that that is a chart that still, according to the market forecast green line, has a bearish posture at this current time. But it was up here today. And I do understand that the Canadian loonie did go up versus the US dollar here today once that news about Canada getting an exemption was starting to hit the news wires. You can also see right next door, its neighbor to the left, is Mexico, and that's the other country that got that exemption from President Trump. And that particular country ETF did really well today, up 1.74%. And that's one that we've been kind of looking at here in the last couple of days as well. I mentioned it 2 days ago because this was the candle from 2 days ago where it really kind of broke out of that mini base right there. Had a one-day pullback yesterday, and here we are zooming right back up. Now, we still got work to do on Mexico. You'll notice that that moving average line is red, and we're bumping our head right up against the underside of that. So, right now there is some hesitation there. We'd like to see a slice through that moving average to get a little bit more confident in where the trend is going next. But right now, things look pretty good down in Mexico. All right, let's take a look at our final 12 grid, which is our Intermarket Analysis 12 grid here. And here again, we've got a bit of a mixed bag between green charts and red charts. And, the one that I've been pointing out here several times in the last couple of weeks has been this one down here, DBA. I think that chart looks kind of interesting to me. I'm gonna right click on it, go to maximize sell, and you'll notice it's a nice consistent trend. A lot of you like to do what's known as trend trading. You're not in it to, get into the market one day and get out the next. And so if you like that concept of trend trading, you're looking for stable trends. The worst thing about trend trading is the whipsaw action. And if you get into a stock that's hot, but it's a very volatile stock, you'll very likely get stopped out quickly. And if you're getting stopped out quickly, you're likely not going to benefit from a profits and losses perspective. So I think people kind of overlook the benefit of finding trends on less volatile charts. And that's one of the things that, for those of you that used to attend my sector-based trend trading class, that's one of the things we prided ourselves in. We were specifically looking for consistent trends without lots of whipsaws. And so this particular chart here kind of reminds me of one of those types of charts that we would have normally been looking at in a class like that. And by the way, I have had this question a couple of times here this week, as far as class schedules in the future and things like that. If we get that sector trend trading class up and running again in the future, it's likely to continue to be a weekly candle-based class like it had been in the past for when I used to teach it. And so I will likely be conducting that particular class on Mondays as opposed to Fridays in the future, just because the weekly candles will be officially locked in. So just a heads up for those of you that are anticipating the coming release of some of those classes. All right, so DBA, agricultural commodities, looks kind of interesting. Keep your eye on that particular story. Let's quickly pop over here to the Market Watch tab. Let's take a look on a one-day basis what sort of sectors were up and down the most today. We did see on the top side here, we've got consumer staples. Now remember, the staples have really been beat up, and myself as a dividend growth investor, that's an area that I have a much higher concentration of my own portfolio in. So it's been a rougher couple of months for me, but it is good to see today a little bit of stability there. Now, what that also means, for those of you that haven't been dividend growth investors in the past, it means that value is being created. And so for those of you that will ultimately attend some of my classes in the future where we're looking for value, I think there are going to be some opportunities within consumer staples, which I generally view as a higher quality group of companies out there. On the downside here today, we did have telecom, but let's be honest, it was only down 0.07%. So that's close to flat in my book. That's not really a big down day to be concerned about there. Maybe we could take a look, since the staples were a pretty big outlier there. Let's take a quick peek at what sort of consumer staples stocks were up here today. And so you can see that Molson Coors, Monster Beverage, Altria, Church & Dwight, PepsiCo, Philip Morris, they were all to the upside. They were the leading categories, or the leading stocks within that particular sector. Kind of interesting. Kind of like the nice sin stock mix you got there with some beer companies, some energy drink companies, some smokes. Church & Dwight, some of you know what they make as a product, as an example. So interesting mix of companies there. And, in the case of Pepsi, Monster Beverage, and Molson Coors, kind of interesting because those companies, of course, use a lot of aluminum. And so the news today, surprisingly, is actually benefiting them. So we'll see. I do know that the raw material cost of the aluminum itself is a fairly small portion of the overall aluminum, because a lot of aluminum is now recyclable materials. And so maybe the market's kind of waking up to that fact here. And after beating up some of those names in the last couple of weeks, for example, Pepsi was down all the way down to 107 just a couple of days ago with a 3% yield. Just to highlight that briefly, I'm going to come over here, take a look at one of my charts, and I'll kind of show you what I mean by that. Pepsi, right here. Right there, there's this gray line on my chart that represents where a stock would have to trade to have a 3% dividend yield. Notice right there, it came down and just kissed it. In fact, I'll zoom in so you can kind of see that a little bit better, because it's so hard. I mean, it's like, did it touch it or not? And yeah, you can see right here it did. So for those of you that were waiting patiently to grab Pepsi with that 3% yield, you should have nailed it last week when everybody else was complaining that, hey, these aluminum tariffs are going to kill the profit margins of a company like Pepsi. Well, wait a second. Anybody who backed up the truck bought a little bit of this very high-quality dividend aristocrat company, meaning they've raised their dividends for more than 25 years in a row or more. They're very happy right now. You don't see a move like this out of a boring company like Pepsi in just 1 week's time. So 107 all the way up here to 112 in a heartbeat. So anyway, just wanted to point that out, kind of an interesting development in today's news. All right, let's now tackle our trade application example for the day. I'm going to come back over here to just a regular market forecast chart. And the stock that I wanted to pull up, as mentioned before, is going to be in the technology space. And this one is going to be Symantec here. Not the biggest tech name, not probably the first tech name you think of when you think about tech stocks here in the United States. But certainly an industry leader within their particular space. And the reason I wanted to point it out here today isn't because it has the nicest looking trend. Believe me, there are better looking trends out there. For example, you look at EA, Electronic Arts, looks very interesting right now. Its competitor Activision looks very strong as well. So when we compare those two charts to something like Symantec, you might say, well, why are you interested in this? The reason is because there's some divergences that are taking place here on this particular chart. First of all, recognize that it has had some nice stability here recently. So, you did have this kind of outlier candle here with the long lower shadow there where it went down slightly below 25, but by the end of the day it had closed way up here closer to 26. So I kind of look at that as an outlier. Really your level of support is right around that 26 area. If you kind of look at that as a zone and not a perfect to the penny level, you'll notice that 26 does cut through this candle over here. It cuts through this candle. It cuts through this candle, this one, this one, this one, this one. Does it? How about this one right here? I'm not quite sure. The low price in that candle, yeah, it did. 25.99 was a low price there. So 26 represents a kind of an interesting line in the sand for people that are trading Symantec right now. And of course, the upside you could see up here closer to 30 is where you've got some resistance. Let's call it 29.5. And so that is interesting that you have specific levels of support and resistance to deal with on a chart like this. The other thing that I wanted to point out is look at the moving average color. It just turned green here within the last few sessions. So we were in this downtrend, but all this stability and price action has now created an effect where the lagging moving average has stabilized. I mean, some people might even say, well, hey, do you have the formation of a potential head and shoulders pattern here? This would be an inverted head and shoulders pattern. And while it's not a perfect example of that, the kind of psychology of that inverted head and shoulders pattern is on the chart there for us as well, which is a key reversal pattern. Well, in addition to that, if you look down below and take a look at this blue line, this is our near-term line on the market forecast. Notice that we've got kind of an interesting divergence that's taking place here. First of all, if we look at price action, what I want to look at is where is the price on the day when the near-term line peaked out over here. So it went up and then it reversed lower. So where was the candle on that particular day? That was this candle right here. And on this particular day, it was trading around, let's call it 27.30. So then we take a look over here and we look at the next time that that line peaked out, kind of had that jut higher and then reversed to the downside. And it's on this candle here, which closed around 27 that day. So on the charts themselves, we have lower highs, but on this particular near-term line, we have higher highs. And so it's telling us that something below the surface is brewing. People that are only looking at price action might not be able to identify that, but for people that are looking at secondary indicators along with price, maybe there's something that the indicators are telling us that are sniffing it out before price itself is going to reverse higher. So that is also viewed as a bullish element. And of course, the background color of the chart is green, which kind of gives us a green light to take a bullish trade on Symantec here in the market forecast as well, because the posture would be considered to be bullish at this current time. So what I thought we would do is we will buy a call option in this particular case, and then we're going to set an alert on both the upside and the downside of this chart to kind of alert us to when either the support area is breached and we have to pull the plug on this trade and take a loss, or where we go up to potentially a target zone and decide to take some profits and sell for a good reason up there a little bit higher. And so what I'm going to do here is, first of all, let's start off by going to the trade tab, and I'm going to look at 20 to 50 days till expiration in this particular chart. Remember, the chart that we're looking at here is only 3 months in length. And so if we were to look out another month and a half, really what I'm hoping to accomplish is that this chart gets back up to some of these congestion areas here from about a month and a half ago. So I'm hoping that only takes about a month and a half as well, which is why focusing on those April contracts could make some sense here. We don't want to buy too much time in this case, because remember, this is a particular strategy when you're buying calls that does not benefit from time decay. It's the opposite. Time is working against us in this case. We don't want to buy too much time here either. If we're taking a look at this, you'll notice that they're not the most liquid contracts on planet Earth, but the open interest is still good. If we look at the open interest here, and a lot of these contracts were in the quadruple digits. But for some of you, you might look at this spread of the at-the-money strike here. Actually, the at-the-money would be the 28, and it's 4 cents. Some of you might say, well, I need only 1 or 2 pennies. So you'll have to decide on that on your own paper money accounts. But for me, I am going to take this trade. So I'm just going to buy one call here. It's just going to be more of a speculative trade. Remember, we don't get too crazy when we're buying calls and puts because they are lower probability compared to a lot of the credit-oriented trades that we practice on these videos. So I'm just going to buy this, and I'm comfortable getting filled at 79 cents on one contract tomorrow. So I'm just going to punch that in, click confirm and send, and off we go. Okay, now that that is in, what I'm going to do now is set up an alert. Now be aware that you can have kind of a bracket order and have the market automatically sell your contract when the stock gets to a certain level. But the reason I'm a little hesitant in this case is because, again, this is not the most liquid stock out there. So I would personally rather be alerted, have the platform tell me when a stock gets to a certain level, so that way I can make an evaluation with my own 2 eyes to determine, okay, are the spreads between the bid and the ask tight enough for me to get rid of my contract at that time? Of course, that comes with both pros and cons, but just kind of explaining the mindset here a little bit more. There is no right or wrong way. For those of you that want to do a bracket order, nothing wrong with that. Either just understand that you can't necessarily guarantee your fill price, and it's just a little bit unnerving if you're doing it on a less liquid security like this. Okay, so with that, let's go ahead and come up here to our Market Watch tab, and I'm going to click on Alerts. So I'm hovering over Market Watch, clicking on Alerts. I've got Symantec pulled up here at the top already, and I'm just going to click on the bid to begin this process, and that will pull up kind of a Create Alert on Price pop-up box here, and it says, alert me on Symantec when the stock. So remember, we're not doing this on the option itself. We're trying to determine from a technical analysis perspective what's happening with the underlying security. So with Symantec stock, we want to be alerted when the bid price is at or above $29.50. That was the level that we identified as resistance up ahead. So I'm going to click that to begin this process. Okay, so that is now in. And now if I click on the ask price, I'm going to do the opposite. here it says the ask is at or below, and in this case, I want to be alerted when we get at or below 26 bucks, which we identified as support there. So if we click on create there, now I have an alert on that one as well. So if we come over here, you can kind of see on the chart itself how this is going to look. It's going to automatically place wherever you have your price alerts on the chart, so that way you kind of can visualize yourself what's taking place or what you're hoping to accomplish. Again, we have this price alert up here on the top side that would represent some of these resistance areas. And then if we look at this price alert on the bottom side here, it'll represent a lot of those support areas as well. So when one or the other of those is triggered, I'm going to come back to the platform and determine, okay, do I want to get rid of my call contract at these levels, or maybe I'll change my mind. Maybe something else will happen technical analysis wise where I'll think it's better to hold on. So we'll just have to see how that particular trade will develop. So with that, thank you once again for joining me here today. Remember to like, retweet on Twitter, and also subscribe to our YouTube channel, and join our Facebook group as well, where there's a lot of other like-minded investors. Hope you got some value out of watching the video tonight. A lot going on with the tariffs, but I hope you guys found that useful to be able to look at charts one versus another in the case of technology versus discretionary to see what looks more interesting from a technical analysis perspective. So anyway, I wish you all the best with your trades and your investments. I will be back with you tomorrow for the market outlook video, so we'll see you all then. Take care, everybody. Bye-bye.